All right, so let's assume that we've successfully identified what we believe is a stock that meets all of our criteria for having momentum. And let's say it's already moving up. So we've already gotten a couple of nice green candles. We've gotten one candle going up, another candle going up, another candle going up. Well, what do I do? Where do I buy this thing? You know, it's already super strong. It's going straight up. Did I miss the whole move? So what I'm going to show you here is one of my favorite entry setups. And I trade many different setups, but this is one of my favorite. And we'll hear from some of my students about some of their favorites in a few minutes. So number one, the typical pullback will usually have 2 to 3 red candles. So a stock moves up, and then you usually have 2 to 3 candles of pullback, as you can see right here. So sometimes it moves up on 3 or 4 green candles. Sometimes it's just 1 green candle. It doesn't really matter. But usually following a move up is a little pullback. These are the waves. And usually you get 1 and you get 2 that are really good. Sometimes you get a third, but I don't count on it. So I focus on the first and the second pullbacks. That's what I focus on. And that has been consistent for more than 10 years of me trading. This is what I focus on. So I identify a strong stock and then I wait for the pullback. It can be called a bull flag pattern. There's different names for these patterns. I enter during the pullback, either as close to the moving averages as possible. That would be buying the dip in a way, with a stop at the low. Or I can buy as soon as the first candle makes a new high, which is right here. And I set my stop, I set my stop at the low of the pullback. So let me show you on the whiteboard what this looks like. So the stock is moving up. We have one red candle coming down. We have another red candle coming down. And now this candle's forming right here. And we have a couple of choices. We use moving averages. And so I'm going to make this dotted line here. This is a 9 EMA. That's an exponential moving average. So it's the average price of the last 9 candles, but it's weighted so most recent price action is more valuable, which allows the moving average to move up faster when the stock moves up faster. I have found that, and this is an indicator I've used for a very long time, that stocks will usually pull back to around the 9 moving average before rallying back up. Now, sometimes if you have a stock that's incredibly strong, it won't pull back all the way to the moving average. It'll just keep going higher. But this is usually a pretty safe spot to look for an entry. So as the stock is getting close, let's say this current price right here is $9, let's just say. And the 9 moving average, let's say, is at that blue line right there is at, $8.80. So if that's the case, I could go ahead and take a starter position at 9, and let's say I buy, 1,000 shares at 9 with a stop at 9.80. Now I'd only do that if I thought I had the profit target of 9.40, 9.50, but let's say the high a day up here is $10. So that's $10. So that would more than justify the return. And then as the stock starts to come back up here, this would be a green candle, of course. So as the stock starts to come back up here, this is where we're getting resolution. And I'm going to show you a couple of these patterns that actually played out. The more conservative way, and what a lot of beginner traders will do, is they'll wait, and buy the second this candle breaks the high of the last candle. That's this price right here. So that cross is your entry. And let's say that's 920. Now, the advantage of that entry is you typically get immediate confirmation. The stock immediately resolves and goes up. Or it drops, but you immediately get resolution. You don't have to sit and wait. And more often than not, this pattern resolves to the upside, which is why I like it so much. So as a conservative trader looking for that 15 cents a day, a good entry right here would probably be around 9.18 to anticipate that this is about to break with a profit target of like 9.30, 9.35. You lock up your 15 cents, you shut it down, you don't compare yourself to other people, you take the profit off the table, you come back, you do it again tomorrow. It doesn't matter if this thing goes up to 20 bucks, you did what you had to do for you. And you're gonna keep doing that every single day. You do that for 10 days in a row. You try to get 8, 9 green days. Now, it might be one of those days you get it at 9.20 and then it drops back down to 9. You stop out, you take your loss, you get out as quick as you can. I'm going to talk about exit indicators and signs of weakness in just a moment. So you want to get out as quick as you can. But as a beginner trader right now, your job is to build consistency. So that means get in, get green, and get out, and I don't want to see you until tomorrow. I tell traders that all the time. I say get in, get green, get out. You don't go broke taking profit. So the entry here is as soon as this candle makes a new high right there. And I dropped my green marker, but actually I have another one right here, but it doesn't really matter. So these are both supposed to be green candles. There you go. Okay. So anyways, your entry is at that sort of mark right there. Okay, so now let's look at the charts. So here's an example of this happening. All right, so this is a stock, and this is a 5-minute time frame, but you can trade this on both 5-minute and 1-minute time frames. Either one is fine. So we're looking at the stock squeezing up. We've got 1, 2, 3, 4, 5 green candles in a row. We can't just chase it in the middle of this move. We have to wait for a pullback. And you know what? If it doesn't pull back, I don't care how high it goes. It doesn't matter. I don't even feel FOMO because it never gave me a good entry. I can only trade it if it gives me a good entry. Now this one's giving an entry. The blue line, or sorry, the gray line right here is our 9 moving average. It comes down. It starts to get close to that level. And now, like I said, you have two choices. You can either be a buyer near the moving average in this area in the middle, right in there, or you can wait for confirmation and get in right there as that first candle makes a new high, which is $4.24. In this case, this is a lower price stock, so the difference between getting in at the bottom and the high is only 6 cents. So it's not really a super significant difference. And in this case, you get to move back up to 450, which would have more than covered your 15-cent target. In terms of taking profit, as a beginner trader trying to build consistency, you take the profit when you have it. When you hit that goal, you take the profit, you lock it up, and you come back and do it again tomorrow. Once you've gained a little bit of confidence, you start holding longer until you see an exit indicator. This is another example where you had a momentary short pullback here, which does qualify. It's not picture perfect, but it works. We resolve to the upside, and then there's another pullback here. Remember what I said about trading the first and the second pullbacks. The third pullbacks, I don't like to trade, so I leave those alone. So first and second pullbacks. This one right here, you could have taken an entry as the first candle made the new high, or you could have bought near the 9 moving average with a stop just below that moving average. Now, the only problem is sometimes it could stop out and you look back on the chart and you think, gosh, I didn't have any confirmation to buy. And that's true, but you only took a starter, you set a stop, and you let it work. That's a little bit more advanced because when you're focusing on just getting 15 cents, you're not scaling in and scaling out. You're doing one entry and one exit. So you're not going to really be getting into taking starters and then adding. That's a bit more advanced. Here's another example. Nice big squeeze up, a pullback. First candle makes a new high right here and then pulls away right there. Second pullback, 3 red candles. First candle makes a new high right off the 9 moving average, pulls away right here. Third pullback fails, right? But that's okay. We already knew that was a possibility, and I didn't trade it because the success rate on third pullbacks is not as strong as first and second. Here's another one. Stock squeezes up, pull back, stop at the low, squeezes higher, sideways, a little bit of a dip down to the 9 moving average, squeezes up, pull back to the 9, dips a little below it, but remember, this is the third pullback right here, so this one carries risk. Now, this is an example where the third ended up going, but a bit of a topping tail, dips back down, goes a little further, pulls back, goes a little further. Now, this is a stock that went from $6 to $14. When a stock is this parabolic, there's so many people watching it that sometimes it can be a little irrationally strong. A stock that's only up 15 or 20%, you're probably not going to get these types of third, fourth, and fifth pullbacks. But when you have something that's really strong, it will sometimes work. Okay, so now let's talk about taking profit. I want to take profit at or before the first signs of weakness if I'm focusing on this 15 cent per day goal. You just want to get in and get out, get in and get out. So when I first take the trade, I want to see strength. What does strength look like? Green on the tape. What is the tape? So the tape is right here. So this is the tape. This isn't like a super actively traded stock right now, but this is the S&P 500 and this is the tape. So these are the tape are actual orders going through. Those are green orders. So I want to see green on the tape. That shows me buyers are coming in. This, I'm seeing red on the tape. So if I got in and I saw red on the tape, I wouldn't be super happy with that. I would think, no, that's not great. I want to be seeing green on the tape. And I'd like to see the price moving away quickly from my entry point, because that's going to put me in the driver's seat. As soon as I can set my stop to break even, I'm in the driver's seat. I'm no longer taking real risk in a way because my stop is break even. I could be holding 1,000 shares with a break even stop, and if it goes up $1 a share, I'd make $1,000. I'd also like to see bid support of buyers on the level 2. That level 2 window is what I just showed you on the S&P 500, DRMA. Let's see. I'll just see if I see any big buyers on any stocks right now. CXAI has a 5,000 share buyer at 65, a 7,400 share buyer at 70. You always add 2 zeros to these. They just abbreviate it. So 1 is 100, 50 is 5,000. So in any case, you can see that there's a little bit of bid support there. So I would like to see some nice bid support. That's always going to give me a little bit of conviction. We've got some buyers that are stepping up to the plate. Now, on the other hand, when I see a sign of weakness, that's an indicator to take profit if I haven't already. If I get into a trade and I don't see any signs of strength, that by itself is an indicator of weakness. So we want to see signs of strength. But a sign of weakness would be a big seller on the level 2, right where I got in, or just a few pennies higher. The obvious appearance of a hidden seller. It's a little bit more complex, but that's when you see green on the tape, but the ask isn't budging. A large burst of red on the tape indicates a surge of selling and selling pressure or possible false breakout. Initially a pop, but then dramatic reversal. So pop and then flush. That's not fun. We don't like that. That's a false breakout. And I don't like entering on a red candle. So if the candle turns red while I'm in the trade, that indicates weakness. Now, if I've just taken a very small starter position, that may be okay if I'm accumulating near a 9 moving average, but I still have to be a little bit careful because it's not ideal. So again, whether or not, so it's kind of, so there's 2 things. When you're going through this trading plan, and this is the trading plan, well, this is a very sort of summary version of the trading plan that I teach. I'll just pull this up here. So in my Warrior Pro class, I teach in chapter 14. I'm just going to grab this. In chapter 14, this is the class that Investopedia and Business Insider ranked as on their top list for best day trading courses. So creating a trading plan, this right here is where I actually give you my full trading plan. I put the whole thing on the table. This is how I trade whenever I'm doing small account challenges. This is the back to basics trading plan. This is about 1 trade a day, generating consistency, building a track record, scaling up from there. This is the starting point. That is the plan right there. So the whole thing I have for you guys. So if you're in that phase where you're focusing on 1 entry, 1 exit, 15 cents a day, get out, your goal is just to build 5, 10, 15 green days in a row with small gains. Maybe a small loss here and there, but just consistency is what you're focusing on. High accuracy, good profit loss ratio. When you scale from there to trading more frequently, you'll also start holding positions a little longer and not selling as soon as you're up 15 cents, but waiting until you see an actual exit indicator. Now, this does carry risk because a stock could go up 15 cents and then reverse and now it's break even. But what you'll find is that you'll have some entries where you took the right trade and it went up not just 15 cents, but 25, 35, 45, 50 cents a share. And that's when you're getting some really big moves. And those obviously are going to make your profit loss ratio much better. So that's the place you want to get to, where you're holding your position until you see a sign of weakness. And then maybe you sell half and you hold the rest, which gets into scaling in and out. I did another episode 2 weeks ago where I was teaching about scaling strategies. I'll put a link to that at the end of this class so you guys can watch it if you haven't already. I also want to remind you that the correct exit will feel too soon. If you hold too long, you'll look back and say, I should have sold at this price. But in the moment, if you'd sold there, you would have felt like you'd be selling too soon. So you need to learn to recognize that the right exit will instinctively feel a little too soon. This is true with winners and with losers. So sell faster, trade faster. When scalp trading, it's very important to be quick. I want to enter before it's obvious. So getting in just before the breakout, like at 418 in that example before, and then taking profit before that obvious sign of weakness, because I'm going to get slippage on my entries and exits if I'm waiting for everyone to be moving in and out of the stock at the same time. So I want to try to be anticipating when we're going to get these moves, using the subtle tape reading skills to enter and exit just before the breakouts and breakdowns is going to make you a better trader. It means learning to anticipate what a stock is going to do. And you're going to leave money on the table. And that's why you want to keep your head down and don't compare yourself to other people. Get in, get green, shut it down, do it again tomorrow. Don't worry about how much I made. Don't worry about how much anyone else made. Your job right now is to try to carve out 15 cents a day of profit. And if you could do that consistently, you're part of the minority of traders out there that find success. So don't worry. Right now, I'm trying to teach you how to work your way to the bottom of the top. There are still only going to be maybe 10% of traders out there that find success. And if you're making $100 a day, you're at the bottom of that, top 10% of traders who are successful. But it's better to be at the bottom of the top than just to be at the bottom, right? So that means you're making money consistently, even if it's only 100 a day, 150 a day, 200 a day. Now you start to scale up. You start to trade a little bit more aggressively. And the fact is, if you get to a point where you're making 500 a day, 1,000 a day, $2,000 a day, you're not only in the, you're no longer in the bottom of the top 10% of traders. You're now moving your way up. And in fact, you're in the top 1% of income earners when you're getting into those six-figure incomes. I mean, this starts to really be significant, what can be accomplished. Now, there's a lot of different careers where you can accomplish amazing things, but most people don't. And I know traders who've been trading for more than 10 years and are six-figure traders. They're averaging, 150 to 200,000 a year, but they haven't become seven-figure traders. So something I talked about recently is that a goldfish will grow to the size of their bowl, right? Now I have a pond and I have some fish that are about 3 feet long. These are some big fish. They're growing to the size of the pond. They can grow big. Now I had them in fish tanks inside when they were like this big. A trader will grow to their level of risk tolerance. You'll grow to your comfort zone. If you want to push your comfort zone, then you can continue to grow, but you have to conscientiously, affirmatively be pushing the edges of your comfort zone. I think that in order to experience the most growth as a trader, you need to constantly be trading right at the edge of your comfort zone. You will fall, but you're never going to grow if you don't fall. That's, I'm teaching my son how to ski and we're going skiing. And I said, listen, am I going to fall? We all fall. You're going to watch me fall. Skiing is not about not falling. That's not a really good goal. It's about having fun, obviously, with skiing. And it's knowing that if you don't fall, it probably means you didn't push yourself hard enough. So I want to see you fall. It's okay to fall. It's okay to lose money trading. It's okay to have losses. It's okay to have days where you went big and it didn't pay off. But that's not probably where you're at right now. Where you're at right now, you might still be in phase 1 of blind incompetence. Maybe you're in phase 2 of trading a strategy, but you're doing it really emotionally. I want to help get you to phase 3, where you're trading a proven strategy, whether it's mine or someone else's, doesn't really matter. You're trading a proven strategy and you have the discipline to follow the rules. That's where we want to get you. And once you're there, you want to push yourself. And you want to remind yourself that every single day you're either going to leave money on the table or give back profit. And personally, I'd rather walk away with money in my pocket knowing maybe I could have made a little more, but I did good by me. I did my job today. I got my 15 cents a day, or I got my 1,000 a day, my 1,500, whatever it happens to be. For me, I got my daily goal. Could I have pushed it harder? Yeah, but how many times have you watched someone push it harder and go from green, whatever it is, to red? Sometimes it's not worth it, right? Sometimes it depends on experience level. But, again, this is if someone's green on the year and they've been crushing it, then yeah, by all means, step up to the plate. But if someone is red on the year, right, then that's when it's time to let's focus in here. Let's just build some consistency. Let's get dialed in. So the benefit of years of experience and educated intuition, I have a pretty good sense of knowing when I need to walk away each day. As a beginner trader, you don't have that yet. So you need to follow